I'm Olivia and I'm a financial advisor here at Consortium Private Wealth. Today I want to just give you some tips on basic tax tips for share investing. Just with the pandemic last year, there seems to be an overwhelming influx of new investors wanting to move out of cash due to the low returns that we're seeing that are forecasted to be here for quite a few years, and wanting to chase greater returns and also potential capital growth. Today I just really want to highlight those little tax responsibilities for those new share investors out there that are new to this game. So number one, your dividends. So every time you receive a dividend statement from a company, you will see that there's cash amounts there. So a dividend is made up of a franked amount as well as an unfranked amount. There will also be a franking credit, which is an imputation credit. This actually represents the tax that the company has already paid for. In your annual tax return, so it's very important that you keep those dividend statements for your accountant to make their job a little easier, you have to declare the cash dividend plus the franking credit. Now, the total amount is taxed at your marginal tax rate, but it is reduced by the value of that franking credit. The other thing is capital gains. So a capital gains will be realised if you sell the shares that you've invested in. Now, if you have had them for less than 12 months, then you have to pay full capital gains in your annual tax return, which will be your marginal tax rate plus your Medicare levy. If you have held them for longer than 12 months, a 50% discount will apply. So then you only need to declare half of that profit. If you sell the shares at a loss, so you're selling them less than what you've purchased them for, it can be offset against any other current capital gains, or you can carry it forward indefinitely for any other future capital gains down the track. Now, there is another option to be aware of besides share investing. You can also consider superannuation. So in accumulation phase, you pay tax rate of just 15% tax on any investment earnings within your super environment. The only trick to this one is be mindful that you have to meet a condition of release to access those funds. So obviously if you've got direct shares in your individual name, you can access them at any times, but just be aware of those tax implications. Like always, go talk to your financial advisor and remember, utilise your accountant during tax time for this kind of investment. Thanks for listening. Bye.